The U.S. housing market just sent out a warning signal, so you're going to want to hear this.
Home sellers in the U.S. now outnumber buyers by the largest margin in 12 years.
People selling homes outnumbered buyers by nearly 500,000.
If you've been waiting to buy a home, now might be the right time to jump in.
See, back in 2020, home prices were climbing nonstop. Inventory was low, so everyone believed real estate was only going up. But now, for the first time since 2011, national home prices are expected to drop year over year, according to Zillow.
Go back just 2 years, buyers outpaced sellers by a wide margin.
Wow.
So things are changing.
But that's not a small shift. That's a full reversal. By the way, if you're new here, my name's Andy Coleman. I've made millions of dollars in the real estate industry, and I'm still telling you it's not a good idea to buy a house right now. In today's market, the average buyer needs to earn $108,000 just to afford a mediocre home. But that is slowly starting to change. However, this gap has created one of the biggest affordability crises we've ever seen. According to new reports, home values are now falling in more than half the country. That includes some of the hottest markets from the last few years. Let's look at California. Silicon Valley condo prices just dropped to 2015 levels, while single-family homes are back to 2018 prices. In fact, in just the past few months, inventory is going up. Mortgage rates are back over 7%, so buyers are hesitating now more than ever. Most people are starting their home search, then realizing they can't afford what they want, so they're backing out. I feel that. You're worried the market hasn't hit the bottom yet, and trust me, it hasn't. But what's even more shocking is how this all lines up with the broader economy. Morgan Stanley just released a mid-year recession forecast. Get this, they're predicting the Fed is going to cut rates before the end of the year. But not because inflation is under control, because the economy is slowing down. When you zoom out, that starts to show. Foreclosure warnings and mortgage delinquencies are going up, especially for first-time home buyers using FHA loans. If you bought a house back during the peak in 2022, you are officially underwater, meaning your home is now worth less than what you paid for it. So you have negative equity. It's one of the first signs that the market is breaking. But it's not just the numbers. The psychology of buyers is shifting too. Some people are now hoping for a full-on recession, just so prices can drop. That's how far things have swung in the last few months. Even though you believe rate cuts will help, it's not that simple. Because what happens in a recession? We know that unemployment rises and lending starts to tighten. Just because prices drop, that doesn't mean you're gonna be able to get a loan. That's why today, more people are renting even if you can technically buy. I really wanna hear your thoughts below. If you can buy but are sitting on the sidelines, why? Which brings us to the big question. Is real estate still worth it today? Let's break it down. Yes, housing prices have historically risen over time, but when adjusted for inflation, the gains aren't always as strong as people think. Over the last century, US home values have appreciated by about 4.3% per year, while inflation averaged around 3%. That means your real return is just 1.3% above inflation, unless you're also generating income as a landlord. That's where rental income used to make the difference. But today, margins are much tighter. After paying for property taxes, insurance, maintenance, repairs, and vacancies, you're certainly gonna lose money if you buy an investment property. There are still ways to make it work, but you need to get very creative. Just buying a single family house, not gonna cut it anymore. You're gonna end up losing $1,000 a month, maybe even more. You're not gonna be able to compete with those that bought a house back before 2022. They're locked in at 3% mortgage rates and they paid significantly less for the house. They can undercut you, charging $3,000 a month for a $500,000 home, but you would need to charge $4,500 just to break even. For the first time, it just doesn't make sense financially to buy a house anymore. Billionaire Warren Buffett agrees. I'm gonna let him speak for himself here.
There's so much more opportunity that presents itself in the security market than real estate.
Let me give you a direct example of this. Warren Buffett paid $31,500 for his home in Omaha back in 1958. 65 years later, it's only worth about $1.5 million. Now that might sound like a lot to you, but just wait until you hear this. In just the last 2 decades, if you had invested $10,000 in Buffett's company, Berkshire Hathaway, it would be worth $500 million. It's not even comparable. So yes, there is a much better way to invest your money and your time than buying a house. Which brings us to the biggest difference between real estate and stocks. With stocks, you can buy a fund in seconds and you can multiply your money by thousands of times. You don't have to negotiate with insane sellers asking for double what they paid for years ago. You don't have to fix a roof or pay a property manager or deal with an annoying tenant that wrecks your home. You just click a button and you're in. Historically, that's paid off big time. The stock market, in particular the S&P 500, has returned 10% annually. Yes, it is more volatile, so if you get nervous, just don't look at it. You ever see those old TV commercials with that set it and forget it guy?
Baby back ribs. Set it and forget it.
Set it and forget it.
Yeah, just do that. It's passive money that compounds over time. So if you take that same $50,000 you were gonna use as a down payment for a house, just put it into an index fund like Vanguard's VOO instead. In 10 years, you're gonna have about $130,000. But if you buy a house, you would be lucky to just break even at this point. You really want to examine the coming recession, which many experts claim we're in right now. Having money tied up in a home that is certainly going to lose value in the coming years, that's not a wise move, because the last thing you want to do is overpay for a house today. God forbid you lose your job and can't make the payments anymore on a house you couldn't even afford to begin with. Not good, because you're going to take a massive hit if you have to sell. So instead, what should you do? It really depends on your goals. If you're looking for a place to live for you and your kids for at least the next 10 years, then yes, buying still makes sense. Not financially, but psychologically, especially if you find a deal in any of the markets that I'm gonna put up on the screen. The real issue is sellers are not reasonable, so finding that deal is beyond difficult. What I recommend is offering way under asking price if you still wanna buy a house. So if the seller is asking for $500,000, then you're gonna offer $450,000 with a credit at closing. If you look on Zillow, all you see are price reductions and homes sitting on the market for months on end. That's a major sign that we're entering into a buyer's market. However, if you're just looking for an investment, you need to be very strategic. You want to buy a multifamily unit, maybe even go in with a few buddies so you can afford a more expensive, bigger building. Avoid townhomes or single family houses. There is nothing you can do to be profitable. For me, I'm looking to buy a house for me and my family. So I'm offering what I think the house is gonna be next year. So listen to this. One of the houses I'm looking at went from $1.65 million 4 months ago all the way down to $1.35 million. You know what I'm gonna do? I'm still gonna offer $200,000 less than that, because when they bought the house back in 2019, they only paid $750,000. All the conditions that made properties profitable in the past, like low prices, low rates, high cash flow, they're gone. So you either need to stay on the sidelines or help bring the value of homes down by refusing to overpay. This is exactly why, for most people, index funds are a better option right now if you have extra cash that you want to invest. They're simple, they're diversified, you can cash out anytime you want. So does that mean real estate is dead? No, it just means the good times are gone. You're gonna see over the next 2 years, prices are going to plummet, just as we're starting to see right now. Mortgage rates are gonna remain high until the time is right. If rates drop too much too soon, it's gonna have the opposite effect of what you want, which is lower prices, so you can finally afford a house again. I know renting is not ideal for most of you, so I understand the frustration.
People have really struggled. We've been hearing about how hard it is to buy a new home, especially for first-time home buyers.
Just hang on a little bit longer. I'll let you know when the time is finally right to aggressively start looking to buy again. Please, if you got value from this video, hit that like button and subscribe. Maybe even share it with a person that you think wants to buy a house right now too. It really helps the channel, and I appreciate you all for being here. Let me know in the comments, are you planning to buy this year, or are you just sitting out waiting for the prices to drop? I'll be down in the comment section replying to every single one of you. I've made millions of dollars in the real estate industry. I've closed over 900 deals. I've helped a lot of families. So if you have any kind of questions on your situation, I'll help as best as I can. Thank you guys so much for watching. I'll catch you in the next one.
We've seen the number of sellers outpacing buyers by more than 33%.
There's 1.9 million sellers in the market and 1.5 million buyers. It's the most since 2013.